This is Innovation Connected, coming to you from the World Economic Forum in Davos, a podcast by Tenity.
My name is Max, I'm a venture partner for Tenity, and I would like to welcome my esteemed guest, Ramin. Welcome.
Hi.
Ramin, can you give us a quick intro about what you did so far in life and what is your main role now?
Okay. So my main role now is a senior partner at MPG Partners. Mainly I'm running the venture franchise of MPG. We are a stage agnostic investor solely dedicated to Fintech. How did I get there? I guess I did Fintech all my life. Started off in consulting, worked as an innovation lead for Germany's largest direct bank, DKB. But my entrepreneurial journey really started in 2014, starting Finleap, which was at that time Europe's first Fintech company builder. And it created and became into something what we called the Finleap ecosystem. We focused very much about finding the right ideas, bringing investors and talent together. Ultimately, the success of the underlying businesses was also always due to the founders and the CEO who were driving it, but we helped them like a launchpad to get started. We created more than 20 firms. Most of them were standalone business. There was also some corporate joint ventures we did. So I think over these 10 years or 7 years in Finleap, gathered a lot of experience what it means to start a company, especially in a regulated environment. A lot of good experiences, but a lot of bad experience. People say you learn from them the most. Size-wise, we had 1,500 people at the maximum, big parties, small parties, big success, small failures, and big failures. Company building and the way we did it was very good in a market which was young, immature, as it was in 2014, Berlin, Germany. There wasn't a lot of fintech talent. There wasn't a lot of VC talent. But 2021, the world was different. Gladly for me as a European and Berliner, the ecosystem developed. The venture ecosystem developed. We had VC money. We had people who are serial founders who are able to kick off something. So we decided, and even so, as an entrepreneur, it's hard to completely switch to the dark side and become a full-time investor. I and my long-term partner, Michael, we created our own investment firm. We continued to take care of the Finleap firm. And then eventually, a year later, which came early in our journey, we joined MPG Partners. Rob Hayward, the founder of MPG Partners, very successful serial entrepreneur, sold 2 companies, one to IBM, one to FIS, and created that franchise MPG Partners. And we have been friends in 7 years. And the opportunity to join that platform and do what we have done before, finding the best fintech ideas and backing the best entrepreneurs, now in a much more scalable setup with our 2 funds. We currently, with the funds we're currently deploying, we have now 30 portfolio companies in early stage, and then we can do that what we like to do from a much global space. So I moved to New York personally. We have offices in London, Berlin, Amsterdam, and obviously New York. So it's very exciting to now play it on both sides of the ocean and really also connecting the dots, but never left the heritage of fintech and excitement and founder.
Can you say something about the relevancy of ecosystems for investors?
Oh yeah, so I mean, a lot of people actually, I think, by now hate the word ecosystems. I used it so much in my life, I cannot hate it because I love it too much. And in fact, Motive, and again, it's maybe overused for a lot of simple, are using the ecosystem word itself. We call it the Motive ecosystem. When we say ecosystem, what do we mean for it? Is bringing together different stakeholders, and is the opposite of one corporate holding, right? So most of the time it means you bring together investors, startups, and clients, which are often corporates or enterprise retail clients. The challenge a little bit with retail clients is everyone is an individual, and everyone decides on themselves. Corporates are more institutional, of course, as a client, so you can repeat the success with the corporate you have with one venture, with this one investor, and so on and so forth. So ecosystem ultimately means you create together something bigger. So we are a big believer in 1 + 1 is 3. Yeah. That's really much our philosophy. But it's important that you always take into account not just one position. So you take into account what it does mean for you as a financially driven investor to back an idea and to give the money to that business to accelerate. But what is also the upside for the corporate? What is the interest for the corporate, for the strategic partner we have? And but also, how does the startup itself benefit from both? How does it leverage the capital and the network from the investor, which the investor will have to that corporate to get maximum success? And I think there's a lot of things where it goes wrong, right? When one of the other interests takes over, the number one interest should always be the interest that we build and back a great company. We get there faster, and the company gets there faster if they have more tapped into than just money. So I think an investor who just provides money is not enough. Everybody says that. It's not so easy to execute on. That's why if you act in one industry, it's a little bit easier because you can become sort of an expert yourself. You will never be as smart as the CEO of a business in that respective business model, but you will have a chance to help him and to be, what I say, educated introductions, right? So a network without, otherwise it's just a better LinkedIn, right? So educated introduction, really trying to understand what is the client looking for, what is the startup looking for, when is the right time. You can make intros too early.
Yes.
Yeah. And this sounds contradictory from an entrepreneur who says you can never walk fast enough, but introductions can be harmful too early, and that's why. From the early days on in Finity, my first institutional investors were Hypo Vereinsbank or UniCredit and Hand Re, the third largest reinsurance company in the world. And we worked at Finity with a lot of different corporates in different settings. And again, also there you can do a lot of things wrong. And we did a lot of things wrong. We hoped too much that they will help us too much. So for example, go to market. Yeah, you think, oh, here you partner with a big insurance company. Oh, they have so many end clients, they will solve the go-to-market. No, they sold insurance products. They didn't sell a tech product before. Yeah. So there's a lot of learnings has been done, but I think on both sides. That's why also now in our new role my new role at Motive, we work with strategic partners, very selected, more focused. Apollo, one of the largest private markets asset manager in the world, alternative asset managers in the world, is one of our strategic partners, as is ABN AMRO. And as we talked about corporates and startup synergies, we also strike the partnership with ABN AMRO because I think both sides agreed that, and they have been very successful in their venture investing. I mean, they invested in Tink, which they sold to Visa and others, a very good performed venture fund. However, they also were interested in even more leverage and more sides. So we as Motive took over the ABN AMRO Venture Fund a little bit more than a year ago. Tim and Hugo were both working there as now part of our team. And that shows you that we believe in the connectivity with strategic partners, but we also believe that ultimately the goal is to enable the founder as much as possible. The experience we have with strategic partners and to act in a network is fruitful and supportive, but also companies we own and growth and buyout. That makes Motive very special. We have not just strategic partners who are investors or friends of the family, but we also have portfolio companies within us, which belong to a different strategy, which belong to a different product. But when we connect these portfolio also on that platform ourselves, including our industry partners who work on our platform, we can create what we call the Motive ecosystem effect. And so, as you can see, that was a very long answer to a short question.
Very well done.
We are a big believer in ecosystems.
Yeah, I mean, you talked about Motive Platform. Can you maybe explain briefly what it means? I mean, we talked about investors, corporates, just in a shorter version.
In a shorter version. No. So our short mantra is it's okay. Our short mantra is investors, operators, innovators.
Yeah.
And we have three pillars we are standing on. Motive Create, which is like our in-house innovation machine. Very smart people. Most of them are tech background, on value creation experts. They work with our portfolio companies, most of them the growth and buyout portfolio companies, but as well as our partners to see what is out there, to help on tech due diligence, but also to getting things done. Motive Ventures, which, as I explained, we run, where we have 20 portfolio companies of our legacy portfolio companies and about 30 in our new funds. And then we have our growth and buyouts funds who do very late growth rounds or buyout firms completely. All the intellectual thesis work we're doing is doing jointly between all departments. So one theme, which is a big theme for us, is wealth tech. In fact, you will see a thought piece of us coming out quite soon, which will say AUA is the new SaaS, so assets under administration are the new SaaS. I'm
very good.
I'm just getting used to it. Yeah. I'm not like Satya who says that SaaS is dead. We would not go there, but we believe a lot in the underlying platforms and technologies in the wealth space. Gladly, we own a lot of these cores in growth and buyout, and we are able to invest in companies which are adjacent to these cores and also break through. Especially when it comes around private markets technology, something which is completely underserved. But to have not the answer much longer, I will stop here.
Okay. It's interesting. What do you think about corporate VCs?
Oh, that's an interesting curveball. So we took over one corporate VC. We are having with Apollo, who is an asset manager themselves, so it's a little bit different than a bank, right? Because their job is creating asset management, also a strategic partner who we're collaborating very, very good on the venture capital side as well. Wouldn't say it is a corporate VC, but as a strong and important LP, we have that connectivity. I think corporate VCs, let's focus from my side, corporate VCs and banking and insurance, because that's the space I know best. In the early days, corporate, especially in Europe, because the venture capital scene was overall not that strong. You had to raise it from a lot of strategic, but especially from fintechs, a lot of people wanted to raise from a corporate VC because the logo of a bank brought you trust, right? Yes. Especially when you're in a B2C world, it brought you trust when you could put your logo there and do it in the right fashion. Same counted for insurance. Then the corporate VC world completely moved in very different directions. So some took it very much more as an asset management approach, so really like money return first with strategic insights. I think Allianz is an example who did it like this, but they also, to be fair, have the balance sheet to do it. The other ones where, if we are open about it, the CEO just want to have a toy because his kid think it's cool to be in the startup world and Daddy now wants us to also play there. It's the matter of fact. I mean, when sometimes CEOs of a big corporate now decide on a $500,000 ticket into a pre-seed round, I'm not showing this is the right use of their time, right? But then we see a lot of corporate ventures funds who just stopped working, right?
Yes.
You saw a lot of them which spinned out, and you saw a few ones which are very successfully. My view is that they're the goods and the bads, like always in life. Yeah. The best are them who are first good investors, really try to deliver the bank or to deliver the insurance company, but ultimately don't go into the way. I find corporate venture capital, if it comes too early, dangerous for both sides. Assuming a bank A invests in a fintech B, and the fintech and bank A department for AML decides not using that fintech company as a supplier, then you have the double whammy, because the corporate then is invested in not the supplier, but the supplier has the problem, this fintech, saying, oh, even our own investor is not using it.
Yes.
And that has happened way too often. And that's why I always advise taking corporate venture investors at the right time. So it needs to be after product market fit for scale. So, and you see this, like the Blackstones of the world are very, very active now, especially when it comes about private markets, fintech, etc., PP, also the BlackRocks. But I think what they learned a little bit, that they come with more money at the right, like Series A plus, I would call it. So after product market fit, after the first 2-3 million revenue, then you take them in and then you scale them. But then is a big difference. Is it the corporate VC, which is like a little bit like a satellite, or is it the real balance sheet from the strategic team?
Yeah.
As a founder, I would prefer to actually have at that time the balance sheet, because then I know it's more linked with the strategy of the corporate. If I want their business, if I just want their money, it doesn't matter. But if I want their business, it's important to get from the balance sheet. And that's why you will see that more and more corporate venture capital funds will discontinue. Banks also have a problem from Basel III, I guess, four, regulation-wise, how to treat and handle and book ultimately the risk of an LP investment and how much capital they need to reserve to it. Long story of me saying, corporate venture capital can work for the startup, can also work for the corporate, but it needs to be done in the right way. I completely not believe that it works for pre-seed, seed, and Series A companies.
Yeah.
It's much better to give it to independent fund managers who have not the adverse selections, who can take also more risk, right? Because when the company doesn't work out, it's not always getting blamed back to the brand.
Yeah.
And at the same time, if you as a corporate want to engage, and you should, especially for M&A purposes, into startup investing, do it at the right time, do it very concentrated, and do it in companies which has been gone through a profile from partners you have been working with before.
Yeah. It's like a bit also indexing the innovation.
Exactly.
Yeah.
So that's a very good point. So I think the number one point why a corporate should invest into venture funds, if they're thematic relevant for them, is really market intelligence. Because I think I like the McKinseys, I like the BCGs, I like the Bains, but you give them money and you get something back. In a fund, you invest money, and by the way, your capital is called over 5 years. So if you commit, let's say, 10 million to fund, it's cash flow wise only 2 million per year. So that's for the large companies, nothing.
Yeah.
And 2 million, my friends of McKinsey will apologize, but it's this 8 weeks project with McKinsey. I'm not sure actually the numbers, right? So, but I think we all get the twist. So,
yes, totally.
It's constant market intelligence you have, and ideally, if you're not invested into complete wrong funds, your money is coming back with a return.
Yeah.
So it's almost, as a common corporate, it's almost lending with return back, but you get real insights. I think that's a huge difference. You need to make an effort as a corporate. If you just give money and call once a year, they're not.
Yeah.
But for example, we are offering monthly calls, like where we always tell about new investments, new I, etc. pp. And many other funds do that as well, and do the connectivity. Tenity does this as well very well. So this connectivity to do between investors and the ecosystem is, I think, the best information flow. You're close to system, and you buy option value, right? Yeah. Because you're close, you can invest in the right time, but you don't need to do all the groundwork with the people.
Yeah, and you have a co-investment right often.
Exactly.
To go later in if it's getting strategically relevant.
Yeah, and so far that now there are discussions, let's say, happening on the globe where you will see then very dedicated vehicles, where we say, okay, people say, I want to double down on wealth tech, I want to double down on AI. And also what I see more and more corporates coming together, right? So what we all know that corporate joint ventures often fail. But when you have it in the structure that corporates jointly up, or strategic join up as an investor, that then can work. Again, at the right time. So when the company is about, and especially again in financial markets infrastructure, it's very important that you bring different parties together. No one can really act on that market alone. So bringing in together different GPs into a vehicle which then helps to accelerate a certain set of infrastructure-related companies, that is something which, if you treat it like an investment, can work much better than direct corporate ventures. Yeah,
no, I do agree. Do you have any experience in the Middle East with that?
Do I have any experience in the Middle East? And so, not so. Actually, we have there's a small consulting company we once spinned out at Finleap years ago called Finbyte, and is done by our former head of business building. He actually only works in the Middle East, but he works very dedicated for Saudi Stock Exchange, so banks, different type of businesses, and I think they're very open to generally innovation. But I haven't done a project in the Middle East.
Okay. You talked before about investors. What's a good investor?
What is a good investor? Oh, that's a tough one. I think we first need to admit that good investor you have two sides, right? And often in these podcasts, you would only speak about the founder side. But truth being told, if you ask the LPs, it's return, right? For the 90% of the LPs, it's only return. Then you have the strategic who also want that you as an investor tell them about market intelligence, investor upside, all the stuff we talked about before. And then the founders, they have a completely different perspective, right? A lot of founders are happy if you just give them the money and leave them alone. that also truth to be told. Everyone is speaking about value add, but it's also limited time you can obviously allocate it. I personally think I'm on a good way when I get calls from the founders about the small stuff. Every founder will call you as a lead investor and say, who do I ask for the next funding round? What's the right valuation? These standard questions as an investor, if you don't get them, you're really bad at your job. But if founders call you about the small operational stuff they don't know how to handle in that moment, that is a sign of trust, which they will only share with you if they trust you as a human being, not use that against them next time it is about a follow-on investment. But B, it also shows that they assume you could help them. And often we can, but not all the time. But that is, at least for me, a good signal that we can help them. But yeah, so again, every founder is very different. But for LP, and I think that is also why VC sometimes is too romantic, it's ultimately about returns.
What do you think about the current fundraising situation globally? Are there areas where you think it's easier for VC firms?
For VC firms to fundraise?
Yeah.
I mean, everybody's talking about the Middle East to fundraise. I think they are, but I think there's also an underestimate how smart the Middle East is as an LP base.
Totally.
Yeah. So people think they travel to the Middle East and collect the money. That's a long
time ago.
Even if it was ever true, I don't know. But obviously, when you're younger as an ecosystem, you might need to do more crazy stuff. But no, so I'm not sure if there. I think what I heard constantly is unfortunately Germany is very, very hard. So I have friends who have, I think, very good products, but Germany is tough because obviously everyone is waiting for the DPI, and the problem in Germany is also a little bit a culture problem. It took Germany a long time to get used to the VC world and direct investment, and then this always happens when. Also, you see the same in stock market, right? When the Bild Zeitung writes about the stock, then it's too late to invest. But a little bit is like
That's a very good one.
A little bit is like this with VC. Also, what happened, at least in Germany, is that people came so late into the game that then they became greedy. They wanted to invest directly in the products right away. They did all kinds of SPVs, and instead of doing it as when you're new to the stock market, you might choose an ETF over stock picking. In venture, people thought they are now stock picking. Everyone wanted to a business angel. We should actually count how many business angels are on LinkedIn. Everyone wanted to do business angel. Everyone wanted to do stock picking. It's damn hard. And I mean, it's hard on public markets, which is complete transparency. On private markets, it's even harder. So I think and we haven't made the shift enough that enough people went into funds. Funds by nature, as professions, but also is more risk diverse because you don't have single bets, right? So I'm a little bit concerned about that notion in Germany. I think now living in the US in 6 months, I think overall the size of the US is just so much different. I mean, a small family office in the US would be, I don't know, top 10 family offices in Germany, right? So there's so much more wealth concentration that I would hope that if you really want to change the world, that this is still a good fundraising environment.
And risk, does that play a role? I mean, that the United States understands risk better or compared to European countries?
Yes, I mean, they understand investing better, right?
Yes.
And they also understand, I mean, in Germany, we talk about that, stuff can go wrong. But actually, no, the good old Schuld, right? Who's guilty of something, is the first question you ask in Germany. And this is a culture issue.
100%.
And, we do have, unfortunately, and I was hoping we overcome, but it seems now... we don't. I mean, look at we have an election in 4 weeks?
Yeah.
We have, if you ask me, the top 3 problems we have, I mean, is, and I'm not here to speak about immigration or migration, but on the top 3 problems we do really have is our pension system. And no one speaks about it.
Yeah.
I heard a number, I think by 2030, 40% of our yearly budget is for pensions. 40%. I mean, it's
quite a lot.
Quite a lot, right?
Yeah.
And no one speaks about it. We have no sovereign wealth fund, nothing. And that's actually, that's very frightening. So the whole way we treat money in Germany overall is a problem. And I hope because the VC scene in Berlin was very flourished.
Yeah,
we got
10 years ago or so.
It was amazing, and Munich is doing super well right now. Berlin. Difficult right now, and unfortunately difficult. There are a lot of people who made a lot of money there left. Yeah?
Yes.
That is...
it's an ecosystem problem, right? Not giving back.
It's a huge ecosystem problem, and I should probably shut up because I moved out 6 months ago. But I am from Berlin. I grew up there all my life. But the most people who were really successful, they came from Austria, they came from Western Germany. Many of them now live in London or Ibiza, right? And there's no local connectivity to Berlin. Like they went there, went with, not all of them, right?
Yeah.
Like there are a lot of our friends from Cherry, for example, who were early days of Zalando. They built one of the greatest seed funds franchises in Europe. Very active in the Berlin ecosystem, the Europe ecosystem, but from Berlin. So not everyone, and without people like Cherries and so on and so forth, nothing would flow. But we could do more, and so I hope that the new government will somehow stimulate the business back again. I'm actually not hoping on the government alone, but at least when it comes to structures, enablement. Long way of saying fundraising is, I guess, never easy nowhere, not in the Middle East, not in the US, especially not in Germany. But ultimately, quality will succeed.
Yeah, totally. Why did you come to the forum, and what are your key takeaways? So our managing partner and founder, he goes since 20 years. For me, it's the first time. It's great as a European to be in Europe, and I see either a lot of Europeans and Germans or people from New York. So that's nice, but obviously also very diverse, very international, which I like when you walk down the promenade, right? India, Middle East, everything is Mongolei, it's a big house here. Yeah.
So Davos for me is really, the serendipity. So just running into people. I had yesterday, I ran into someone last week mentioned to me a certain CEO I should get to know, and he didn't make the intro yet, and suddenly I was standing next to this guy a week later, and that is Davos for me. And I met the friend I studied with, I haven't seen since 10 years. So Davos is for me really bringing the people together, all very relevant, but of course, we need to admit it's also a bubble, but it's a good balance for me between business, politics, technology. Very informed discussions.
Yes.
Sometimes too informed, because yesterday we had a table discussion about AI, and I'm not sure I wanted to know what everything is possible with AI when speaking to certain people, be it from big tech companies or government bodies. It's exciting, it's frightening as well. As a human being, it's also a little bit frightening. Funnily, yesterday at the dinner table, the AI was choosing the wine pairing and was competing against the sommelier. Very nicely done. Both wines were good. So it's a great place to exchange. Very informed, good people, everyone very driven, and the length of the time being here in Davos ensures that people also take a little bit more time than to other conferences where just fly in, fly out. You see people 2-3 times on the street at the party.
Yes.
So very good for networking. Great place to be, and the weather has been fabulous.
Wow. Yeah, thank you very much. I wish you a very good conference or the last 2 days, and I hope to see you soon next year and probably somewhere else in the world.
Thank you so much.
Thank you very much.
Thank you.